So there's this clean energy company, Ceres Power, and after 25 years of really deep R&D, it looks like they're at a huge tipping point. Their latest earnings call shows a company that's flipping the switch, moving from just being a tech lab to a full-on commercial powerhouse. They have a massive ambition to become the go-to standard for a new kind of power generation. So the big question is this bet finally about to pay off? Let's dig in. All right, here's how we're going to break it all down. First, we'll look at the huge global problem they're trying to solve. Then, we'll get into their pretty clever business model and their three-part strategy. After that, we'll see the actual progress their partners are making, figure out their path to actually making money, and finally, look at the two massive markets they're going after.
Okay, first up, let's set the stage. Because to really get the opportunity here for Ceres, you have to understand the massive power crunch that's happening literally all over the world right now.
According to their own CEO, we're facing an acute need for power. And this is being driven by two trends you just can't stop. First, the move to electrify, well, everything. And second, the absolutely explosive growth of AI data centers that are incredibly hungry for energy. The world doesn't just need more power, it needs it right now.
And this, right here, shows you the core of the problem perfectly. If you need power today, the old school ways are just way too slow. I mean, think about it. You're looking at a 6 or 7 year wait for a gas turbine, and it could be up to 15 years just to get a new connection to the high voltage grid. That giant delay creates this perfect opening for something faster, something modular, something you can build right where you need it.
So how is Ceres planning to jump into this gap? Well, that brings us to their really unique business model, which is basically built for speed and for global scale. See, instead of building their own massive, super expensive factories, Ceres uses what they call an asset-light licensing model. They focus on perfecting the core technology, that's their secret sauce, and then they license the blueprint to these huge global manufacturers who already have the money and the factories to build at scale. And what's so interesting here is when you put them side by side. Traditional manufacturing means you're spending a ton of money and it's slow to grow. The Ceres model, on the other hand, is much more disciplined. It lets them expand all over the world super fast through their partners without having to take on all that financial risk themselves.
And here's the really genius part. Their core technology is basically a 2-for-1 deal. The exact same platform, the same solid oxide tech, can be used to generate power today, and it can be used to create green hydrogen for tomorrow. So when their partners invest in building a factory, they're really investing in two gigantic future markets at the very same time.
Okay, so with that clever model in place, what's the actual game plan? Let's take a look at their official 3-pillar strategy for growth.
It's actually refreshingly simple. Number 1, sign up more global manufacturing partners. Number 2, help those partners actually succeed by getting their products out there and drumming up demand. And number 3, which is the foundation for everything else, make sure your technology stays the best in the world.
And you can hear it right from the CEO himself. Their leadership in technology is completely non-negotiable. It's the whole reason these giant companies partner with them in the first place. It's the absolute core of their value.
Look, a good strategy is one thing, but actually making it happen, that's everything. So let's see how this plan is turning into real-world progress with their partners around the globe.
And this is a huge one. Their partner in South Korea, Doosan, has officially started production. This is such a massive milestone because it's not just a factory that's opening its doors. It generated the very first royalty revenues for Ceres. It's proof that the financial model actually works.
Meanwhile, over in China, their partner Weichai is moving at an incredible pace. What this quote tells you is that momentum is building. As Ceres gets better and better at transferring their tech, each new partner can get up and running faster than the one before.
And then in Taiwan, the partnership with a company called Delta is strategically perfect. Why? Because Delta's already a key supplier to the data center market. They can take Ceres' power tech and plug it directly into a complete solution for that exact high-growth customer they're already selling to. It's a perfect fit.
So when you zoom out, you can start to see this whole global ecosystem they're building. You've got first production happening in Korea, rapid scaling in China, a direct play into data centers from Taiwan, and then key hydrogen projects with giants like Shell and Denso. They are methodically building a truly global footprint.
Okay, this is all really impressive progress, but let's get to the bottom line. How and when does Ceres actually become a profitable, self-sustaining business?
Well, their target is incredibly clear. Management says that signing, on average, just one major new licensing deal per year is their path to becoming cash flow neutral.
Think about that. Just one big deal a year gives them control of their own destiny, so they don't have to keep relying on the capital markets.
And to help them hit that target, they've also restructured the business to be much more focused on the commercial side of things. And this big change is expected to drive a pretty significant 20% reduction in their costs, which makes that break-even goal even easier to reach.
So the key is to think of their plan in 2 stages. In the short term, it's all about those high-margin license fees from new partners. That's the cash that helps them become self-sufficient. But that's not the end game. The ultimate prize, the real goal of the whole business, is to build those powerful, long-term royalty streams that just keep flowing as their partners scale up production around the world.
So let's wrap this up by looking ahead at the twin opportunities that this entire strategy is built to capture. The immediate opportunity in power generation is just massive. Ceres thinks there's a 22 gigawatt market for their tech by 2030. And what's really interesting here is how it's split. Almost perfectly 50-50 between that hot data center market everyone's talking about and other really important industrial and commercial uses.
But remember that dual-use technology we talked about? Every single factory being built by partners like Doosan, Weichai, and Delta for today's power market is also a pre-built investment in the future green hydrogen economy. That is the massive, longer-term prize that their technology unlocks.
Which leaves us with one final, powerful question. With its technology being built directly into the products of some of the world's largest manufacturers, and with those first royalty checks starting to come in, is Ceres Power actually executing its plan to become the undisputed industry standard for this technology?